All right, guys, Snapchat stock fell over 40% on Friday. So in today's video, I want to jump on and break that down for you, give you my thoughts if it was a huge overreaction or completely justified. I'm also going to go over the fundamentals and give you my Snapchat stock price prediction or what I think the stock is worth. And then I'll break down the chart and give you an idea of where the Snapchat stock price is headed from here. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin. I am your host. In today's video, guys, we're going to talk about Snapchat. Like I said, it's down. It fell over 40% on Friday. They came out. They issued some downward revisions. They said that their revenue and EBITDA was going to come in lower than the bottom end of their guidance for Q2 that they issued on April 21st. Everybody lost their mind. They also mentioned that they are going to stop or completely slow their hiring so that they are not bringing on any new employees. That made investors very scared and the stock just plummeted. Now, I want to kind of figure out if that was a huge overreaction or if it was justified. They did mention in that 8K that they released that they still expect strong user engagement and a huge opportunity to continue to grow the average revenue per user. So there was some good, there was some bad. Analysts started just slashing price targets, issuing, downward revisions. But I will say a lot of analysts continued to add, outperform or buy ratings while they were slashing their price targets. I will admit, guys, before we even get in, I think the Snapchat stock prices that people are issuing are still a little bit high even after they cut them down. So I want to give you what I think the Snapchat stock price is worth today, where I see the Snapchat stock price headed from here, so you have an idea of what I'm doing and what I think. Real quick, guys, before we get started, subscribe to the channel if you want to see more videos like this. Come over and join us at the Patreon if you want to get all of our trade setups. And Day One Squad, I love you so much. Thank you for your support. But let's get started, guys. First thing we're going to look at, guys, I just want to kind of show you some of their previous data. As you guys can see, revenue growth has been pretty explosive ever since 2017. They were doing 825 million in 2017. They did 4.1 billion in 2021 full year. They averaged like 50% revenue growth year over year for the last 5 years. So pretty impressive stuff. When it comes to daily active users, I was actually really impressed about this. They've got like 332 million daily active users, and they've had 3 consecutive years of accelerating that daily active user growth. I personally thought Snapchat was kind of falling out. I don't use it, but apparently a lot of people still do. I do think that there's some interesting stuff about Snapchat, and I think there's 2 kind of verticals that they can do very well in. So I'll show you that in a second. When it comes to adjusted gross margin, they're growing their gross margin pretty, substantially. 35-point margin expansion. That's obviously, great margins there. I'm not a huge gross margin guy. I would rather look at the bottom end rather than, the top end. Adjusted gross profit, more than 12 times growth in gross profit since 2017. But I mean, this is the stuff I really wanted to look at, guys. Again, I like to look at the bottom end. As you can see, guys, their net loss is still negative, right? They're still losing money, but they have been narrowing those losses consistently year over year, which is great to see. When it comes to adjusted EBITDA, they just flipped positive in 2021, actually substantially positive. Positive. In 2020, they had 45 million, whatever. But, last year they had a significant amount of, EBITDA. When it comes to operating cash flow, guys, negative cash flow all the way up until 2021 when they did about 293 when it comes to operating cash flow. Free cash flow is what we really want to look at. They did 223 million. So they're right there. They just started getting free cash flow positive. And look at how much they've grown their free cash flow over the last 3 to 5 years. I mean, they went from negative 340 million in 2019 to positive 223 million in 2021. So, they've done a really good job at that. I want to point 2 things out here, guys. This is the stuff that I think is going to really kind of be the vertical that will help Snapchat stay relevant moving forward is this type of stuff. Their AR creator platform, Right now, guys, a majority of their revenue, almost all of it, comes from advertising, right? So when you've got stuff like this going on, it really kind of gives advertisers a reason to use you over other platforms. And this type of stuff is getting really big. Augmented reality, where you can try your shoes on, try your watch on, you can see yourself in, a wedding dress if you're a female, stuff like that. I think this is going to be this type of stuff that's going to keep Snapchat doing well moving forward. I don't think it's just necessarily the social media aspect of it. They do have huge metrics when it comes to like the percentage of 13 to 34-year-olds that use Snapchat. It's like 75%. But I do think that the more that they can focus on the augmented reality, the more that they can focus on improving their advertising platforms, the better they're going to do. I'm sure you guys have seen a lot of the Snapchat filters lately with like the Minecraft stuff where it digs up the floor. So that's the type of stuff I think is going to benefit them the most moving forward. As you can see here, guys, more than half of people want to use AR technology to assess products, allowing for risk-free try before you buy experience. Returns are a $550 billion problem, which AR can help fix that. AR guided purchases led to a 25% decrease in returns. That is a huge incentive for retailers, companies, e-commerce companies to use this type of service, to sell their products. So just wanted to throw that out there, guys. Obviously, not a Snapchat expert here. I'm just kind of giving you my thoughts of what I think is the big vertical for them. If we jump over, guys, I want to point something out. This is their annual revenue estimates for the next, till 2031, so the next 10 years. You can see, 23% growth year over year in 2022, 37%, 32%, 26%, 18%, 17%. So they're still projected to be growing over 20% for the next 5 to 6 years. That's pretty impressive stuff. It's actually looking more like 30% for the next 5 years. The reason I bring that up because I want to jump over to the discounted free cash flow sheet. I personally think Snapchat is overvalued at the current levels, even though it's fallen an unbelievable amount in the last year. Guys, I'm coming up with, if I use 30% revenue growth for the next 5 years, I use a 5% free cash flow margin, which is more than what they're doing today. They're doing about 4.6%. I'm coming up with $10.50 for an intrinsic value per share today. If we jump the revenue growth, guys, we give them, a super benefit of the doubt. We go 35%. We do a 7% cash flow margin. We're still coming up with $17.70. So the stock's sitting at $13 right now. It's just a little rich for me as of today, as of today. When you look at like the price to free cash flow, guys, when I do the price to free cash flow, I use a 20 times multiple. They're coming up with like a $4.8 billion valuation is what their market cap should be. And they're like a $28 billion stock. So the stock would literally need to fall down $4 or $5 in order for me to think it's a good value based off of their price to free cash flow. But, they are growing quickly, so maybe you could give them a little bit of a premium. I just think $13 is a little rich at these, present times. If we jump over to the chart, guys, this is what I really wanted to look at. This chart is really interesting. So like we talked about, we got absolutely devastated ever since September of 2021. In less than a year, guys, it is down over 85%. I want to point a couple of things out. So here's our gap down from Friday, down 40%. Before that, though, we came just absolutely crashing down. We found support at a critical inflection zone. So we've got the peak from the IPO, guys. High from the IPO, high from June of 2020 after the COVID crash. And look what happened. You gapped over the IPO high. You gapped over the inflection zone and it was off to the races. Once you break that level, guys, it's off. So you came crashing down, you found support, you caught a nice reaction, you pulled back, tried to create a confirmation low or, back tested as support, but then you rallied, made a lower high than the previous high, and you dumped again. So what does wave structure tell us, guys? Like we've talked about, when we've got a 80% retracement on X to A on our B point, 78 to 80% retracement, a lower high on C, we're likely to break down to the 1272 or the 1618 to create a bullish butterfly. So we've got a bullish butterfly here, guys. the 1618, and then look at the BC projection. The C to D leg is confluent with the 224. So really nice harmonic at a critical inflection zone, which was the initial all-time low from August of 2017. So this is a very critical level here, guys, like $11.28 to $12.65. That's that zone that, again, was your initial low, another low from back here in November of 2017, another low from May 2018. You can see a high from April 2019, a low from October 2019. You can see after the COVID crash, it dumped, didn't quite get to that 577, which was the next level. Started to rally. Once it back tested it, started gapping up and went straight back to the top of the range. You do have that $20 level, which is that peak from February 18, and also that wick low a few days after the IPO. Not a major level, but it is a level nonetheless. So, and you can see it also tried to hold it here before the big gap down. So we've got this bullish harmonic here, guys. We've got the reaction at the inflection zone. We've got deep, I mean, look at this, just deep, mature levels of bullish divergence, class A, in really oversold territory. So we should see a really nice reaction here, guys. It's not the breakdown, right? It's not the big gap down. It's what happens after. You always want to look for that follow through price action. So we had the breakdown. We started to react. What happens here with literally class A bullish divergence on both your oscillators, if you don't see it make like a really like stout, mature reaction here, if it just rolls over, guys, and you break that 1128, you're probably headed to 577. Obviously, what we want to see is we want to see a type 1 reaction, a nice, stout type 1 reaction, type 2 return for that confirmation low, and then we want to see it run again, back test our inflection zone before heading to higher prices. We talk about this all the time because then you get your first low, then you get your second low, and you can take the trade with putting your stop loss, right under the inflection zone. Because we know historically, if it holds above this level or if it back tests it, we're likely going to see at least 20, but likely, 2709. Now, the fact that we are already starting to roll over with such deep levels of, really nice bullish divergence, it's kind of worrying. If we break that level, guys, if we can't react here, if there's not, the way you look at it at an inflection zone, guys, think of like the Revolutionary War. You've got the soldiers walking at each other in open combat, right? The level, the inflection zone is where they meet. You got buyers, you got sellers, right? Whichever one wins, that's where it's going to go. So if buyers win, sellers get exhausted, they mow through the sellers, you're going to go to the upside. If sellers win, they mow through the buyers, you're going to go to the downside. So you got to look at these levels like buyer psychology. They are trying to defend that level. If buyers can, defend it, we catch a reaction. Sellers, push it back down. We create the second low. We've got a beautiful trade setup, not just on the daily. I'll show you on the weekly as well. If we jump over to the weekly, guys, look at what we've got. We've got a really nice bullish shark pattern here. So if we can start to see something, if we can start to get that second low, look at the just insane bullish divergence in development on your MACD. What would happen, guys, is you would start to get something like this. Because if you look at your relative strength, there's no bullish divergence in development. You just made the lowest level of relative strength that you've seen since December of 2018. But what you could see happen is you could see your relative strength start to rally with the reaction. So it's deep oversold, starts to reset the oscillator, it comes up and then pulls back and makes a higher low. Let's just say, the relative strength index does something like this. It pulls back, comes up, tests neutral, comes back, and let's just say it like either rejects, the bottom 30 line, or it rejects the bearish control zone at 40 and starts to head up. If it does that, guys, you would have real deep levels of bullish divergence on your relative strength. You'd have triple bullish divergence on your MACD on your confirmation low. So you'd have class B on your relative strength, class A triple on your MACD, and you would have a beautiful trade setup. If that doesn't happen, guys, again, there's no indication that the bottom is in right now because it's our first low. Nobody knows if the bottom is in because it's the first time testing this level. Once we get confirmation, that's what market participants want to see before they start placing their orders and reaccumulating. If that doesn't happen, I'll see you at $5.77. And honestly, we could probably even see a little bit lower than that, $4.90. So keep that in mind. I am not touching this thing until one of two things happens. We either get that second low or it rallies. We get back above $27, $29.44. We get a back test and we get a bullish signal that it's going to continue in the right direction. But you cannot touch it until one of those two things happen, unless you believe in it wholeheartedly and you're dollar cost averaging in it to the long term. I don't think the fundamentals are there. I would need to see it fall to about $5 in order for me to buy it for just like a long-term hold. Or it needs to set up as a technical swing trade, and then I would take it. So let me know what you think down in the comments, guys. I will say this. If it reacts here, first target 20, but your real target's 27, you break 29.44, your next target after that's 43.17. If that doesn't happen and you break down, you already know where it's headed to the downside. So let me know what you think down in the comments. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come over and join us at the Patreon, and I'll see you guys in the next one. Peace.